Welcome to the Worldwise Wealth Podcast. I'm your host, Nicole, and this podcast is your guide to building a truly borderless life. From entrepreneurship, investment migration, tax optimization, and everything in between, this show highlights the nuances of a global citizen lifestyle. Let's dive in. Welcome back to the Worldwise Wealth Podcast. In today's episode, I sit down with Janna Scott, who is the founder of D5 Tax, which is a trailblazing platform that simplifies crypto tax compliance through innovative blockchain integrated solutions. In this episode, we really dive into the details of crypto tax reporting and crypto regulations, not only in the US, but also globally, and what may be coming in the future, some trends that she foresees in the crypto tax regulation space, both for individuals and businesses. We also dive into how her platform really uniquely addresses the challenges of crypto taxation and the challenges that only her platform is addressing that every other crypto taxation platform is not hitting. We also talk about some of the common mistakes for both individuals and businesses that she typically sees when reporting crypto tax. And of course, we dive into various other topics, including cold storage and DeFi. So with that, let's get into today's episode. Janna, welcome to the show, and please share with us a little bit about your background and how you got into this space initially.
Thank you so much, Nicole. Um, well, my background, let's start with something easy because getting into this space is always a little bit more complicated. Um, I've been in public accounting for 15, 16 years. I moved to the US from Germany in 2005, went to school here, and numbers just make sense across different languages. So numbers were always my thing. So I've been in public accounting and taxes for about 15, 16 years. And I've worked in public accounting, meaning, with CPA firms, tax companies, etc. After I got my bachelor's and my master's degree and my licenses. And then I worked my way up in the government, and I worked as a tax specialist, a fiscal analyst, and I oversaw the State Department's finances and treasury reports, etc. Um, until I realized I can't really make a difference in that position, and I left, which a lot of people declared me crazy for leaving such a stable position. But this is what led me to really work with individuals and share my knowledge when it comes to business taxes, individual taxes, all these tax credits and scams that are out there. There are a lot out there. Well, about 3 years ago, I had a client come to me and said, "How do I report my crypto taxes?" And I said, "I have absolutely no idea." And I had my own trades at that time. In 2017 I started trading here and there, but I had multiple wallets and exchanges, and I had a Coinbase wallet that had from 17 to now, obviously, but had about 300 transactions. So not a lot in the crypto world. You all know that that's not a lot. And I took this little exchange and I connected it to 14 of the main products on the market, not just US, but from other countries as well. And I connected it, I paid their fees, and I received the calculations back. Now, every single product gave me a different capital gain, capital loss, and income number after calculating my transactions, my 300 transactions. And I thought, and none of them actually matched either. So every single one had a variance. So I took those and I said, okay, what is the problem? Why is this not working? And I got a little OCD because numbers, there's checks and balances. 1 + 1 will always be 2. And I pulled the raw data from each of the products, and then I pulled the raw data from the internal blockchain using API directly as well. And I sat down, and it took me probably a year and a half to really get to the bottom, um, examining regulations that the IRS has put out, and and simply understanding where every single product is coming from and what is the right way to do so. And at this point, I have run my data and my research has been run past multiple universities. The SEC got wind of it, which means I presented everything to the SEC, who sent me directly to the IRS. And in my conversation with the IRS, we discussed how their internal audits work, which was in 2023. And my research proved that what they're doing was actually inaccurate. And I can say this out loud because I have professors who have presented it to the IRS as well in order to stop the crypto audit. So my first conversation was in 23, me showing them the exactly what they're doing is wrong, and it gives them a wrong audit outcome, which means they can't really audit the taxpayers on crypto. The IRS then sent us directly to the congressional committees. So we met with the congressional committees to outline the details as well. Now, the same question I asked was to the SEC is, why are you not letting the taxpayers know that what they're using is inaccurate? Because the SEC doesn't have oversight over crypto, meaning the SEC does not care if it's right or wrong. The IRS does, the SEC doesn't. So at this point, I had also reached out with my findings to all the products that we audited, including we've also audited 53 of so-called crypto tax experts on the market, accounting firms, law firms, and we've paid them all, gave them all of our research, all of our transactions to give us back the right numbers. And again, we ended up in the same position. Some of these companies simply go and sign up for these products, run your crypto through, and present it as their own calculations, and nothing was accurate, nothing was right, and you paid thousands of dollars. So when I went to these products, and again, I'm not saying this as we discussed just without having proof, I have proof of it all. I emailed them, I went through them to LinkedIn, I scheduled meetings on their website, and I tried to explain I found issues that are detrimental to your users when they are getting audited and when they're reporting their crypto. I don't want any money. All I wanted was to hand them my research, and all of them but one said no thanks, or the compliance and tax managers actually, quite frankly, just blocked me. And the one company we did meet with their CEO and tax attorney, we asked them, we said, how did you get these numbers? And they couldn't answer it and turned around and tried to sell us their product. and so we didn't get anywhere. And at that point, I said, you know what? Let's just try to build our own. It's taken us 2 years. We are ready to launch. I'm holding it back a little bit, as I've explained, because I want to perfect it, and I want to ensure that the data we're utilizing and the algorithms we have in place are completely 100% accurate, because I want my product to be seen as an audit ready product. The IRS has already sent us a request for information and a request for proposal in order to hopefully eventually go back into discussions to implement the product on their back end, because the issues are just severe. There's a lot of issues out there. I don't know, and you can Google all this. Google John Doe letters sent by the IRS to crypto exchanges. They've sent out 1,000 John Doe letters to exchanges, wallets, anything that uses KYC, meaning MoonPay. You have to verify yourself. Any of these products, and they have responded. They have responded. They have sent back the names of the U.S. citizens, so anybody with a U.S. Social Security number, to the IRS saying this person bought crypto. So they know who you are. They know that you bought crypto, and audits will eventually start up again. So we're prepping for it, because right now, if you utilize these products, there are some products that you're utilizing, you severely overpay, which means an audit would be beneficial for you. But there's other products where you severely underpay, and those will be detrimental. Now, the additional issue is, and you can again pull this as a publication by the IRS. The IRS put out a publication last year saying that the crypto audits will replace a third of their budget. Can you take a guess how much their budget was in 2024?
Something absolutely ridiculous.
$2.2 trillion. So this is what they're having their eye on, especially with the rise in crypto. In 2024, they're looking at replacing a third of their budgets with these crypto audits, meaning it is capital gains tax, income tax, and most importantly, penalties and interest.
Okay, this is really interesting. There's so many directions that we could take this, but I think the first question that I have for you is some of the common mistakes that you see for both individuals and businesses, maybe whichever one is more prevalent when it comes to reporting their crypto tax. And then I think a lot of people have, and maybe it's different for non Americans, but a misconception of if I'm using a cold wallet, if I'm using DeFi, then they're never going to know that it was purchased by me. So, what are some of these misconceptions that you see? And I mean, I know you know much more than I do, but I know that there's a lot going on in the back end with governments that we don't really see when it comes to crypto. And they have a lot of info on us.
Oh yeah, they have a lot of info on us. So the first thing is the IRS partnered with Chainalysis. Again, look at government contracts online. Chainalysis has a government contract, and they're really good at tracing crypto. So let's use an example. Let's say you bought, I don't know, you had $20,000 of Bitcoin on your Coinbase wallet, and you transferred it out into your ledger and has never moved since then. Great. Technically, there's no capital gain event, no taxable event. However, the IRS still wants to know that you have it because, as you've maybe seen in recent publications and newspaper articles, the IRS is starting to seize crypto in cases of tax fraud and things like that. So Chainalysis plays a big role in this, and they've worked with not just the IRS but Homeland Security and other departments, and that's all outlined in their contract, and you can see who paid them the most. Um, Now, if you say, okay, this is not my hardware wallet because you don't want them to know, then there is a taxable event because obviously if you send money from one checking account to another checking account, it's not income to you, and the same goes in the crypto world. You send money from one wallet or one exchange to another, it should not be a taxable event. But ultimately, they want to know what you have done with it, where it went, and what is taxable and what isn't taxable. Um, Now, when it comes to mistakes people are making in reporting, honestly, at this point, it is not the taxpayer's mistake. It can't, because there's absolutely no way that anybody, I mean, like I said, we've audited so-called professionals too, not just the products, but there's no way that you're going to take your transactions and you're going to be able to calculate the accurate basis. There's no way. I've had a client that I've did some testing on. He gave me about two different wallets and one exchange with about 20,000 transactions. And after doing this for 3 years, it took me 2 weeks to get through it manually. And that's after me and then knowing full well what I need to do and how I need to do this. Now, they rely on products, and these products are inaccurate. And I think it would be very important for the IRS that if they do audits, to not have penalties and interest, because if you are a taxpayer who tried to do their best and utilize these products that promise that they're the best on the market, IRS compliant, et cetera, you were misled and you're in a position where it is not your fault. Now, moving forward, once this is really made public and people understand now, and you go through an audit and you continuously utilize knowingly a wrong product, that's a different story, right? That's different. But right now, I don't think it is anybody's fault if they haven't reported correctly, because there just is no way to report correctly. Now, since that little box on your return popped up in 2021 that says, did you trade crypto this year? Now, if you check no and you traded crypto, the IRS can go and say, look, you purposefully lied on your return, and that can cause some issues. And they can maybe push, you're trying to evade taxes, especially if you had a big taxable event and you didn't report anything, and we can get very technical here. And the IRS will ultimately, because they're looking at a big chunk of money. But I can't really say that I don't have any real advice, because there's nothing out there that will give you a full picture. And a lot of the features in these products already make it not an audit ready product. What I mean by that is, for example, QuickBooks. Let's take QuickBooks. If you get audited by the IRS as a business, and the IRS will never accept your QuickBooks reports as proof of anything, because in QuickBooks I can manipulate a number. I can say, look, the bank might come up and send over $50,000, and I change that to $5,000. It is very manipulative, and that's the same thing with these products. These products even go further. Let's say I bought a Bitcoin. In these products, you can change Bitcoin to Ethereum. You can change the spot price from 50,000 to 5,000. You can change the fee amount. So this is all you can edit all of this, which automatically you cannot bring it to the IRS and say, here's what I use, because it could have been manipulated and there's no way of knowing. So it's very hard to really pinpoint how to do it right, and that's why we built the product. We built the product on a way where there's no manipulation allowed. Because what the blockchain has, that's what happened on the blockchain. That's the whole goal of the blockchain. It's you cannot change what happened. So that's the intricacy. But also we are offering audit protection. So if you get audited and the IRS comes to you and says, well, this is what we came up with. We're right and you're wrong. You owe us this much. How many people can really go there and defend it, especially if they're utilizing a product that the IRS full well knows does not work, isn't accurate? What accountant who isn't even able to do this manually can go and say, this line item, you have a wrong capital gain. This line item, this is actually an internal transfer, ABC. We can defend it. We can argue with the IRS. And I think that's important to have somebody in your pocket who understands it. And we have 3 different versions of our product. We have the individual trader version, and we created a QuickBooks, basically an accounting version for crypto for businesses, so they can track exactly what they're doing too. They will get a profit and loss, a balance sheet, and we have an accountant version, which means your accountants can actually see exactly what's happened. So your accountants now can go into an audit confidently and say, well, we use this product, and the IRS already knows who we are. We use this product, and this is what the product came up with. And then they can reach out to us and we can give them the internal algorithms and show exactly why this product came up with it. And if all else fails, they can call us in directly. And we can go meet with the IRS as well and say, we have our licenses, we're allowed, to represent you in front of the IRS. We have tax attorneys we're working with. We have professors, we have consultants, and from universities that have internally worked with the IRS that are working with us. So we're trying to make this, all I want to do is protect the people, because according to the IRS, there's 56 million crypto holders currently. There's about 93 million Americans across the world, US citizens across the world, not just in the US, that have touched crypto since crypto came to be. Can you imagine audit letters going out to that many people and the disaster that is going to come? The people that are coming out of the woodworks and saying, we can get you through a crypto audit. No, you can't. No, you really can't. Because it doesn't matter what you reported, it is wrong. Whether it's wrong in your benefit or it is wrong in your detriment, but it is wrong.
So interesting. It's really an interesting gap in the market, that because there were so many other companies doing this, it's interesting that you found the gap of there's a lot of other companies doing this, but they're just not doing it properly. So we're talking a lot about the IRS and specific to Americans. How does this
Mhm.
work in other jurisdictions and with other governments around the globe?
So the same way. As I said earlier, I'm from Germany. I have a lot of my family is still in Germany. So my dad has connections with the European politicians, so European Parliament, and it works the same way. All governments, there are some governments that are not, but most first world country governments are going to go after the crypto capital gains loss income. Now, they're running into the same problem, because, again, I audited the products that are from Germany, that are from Australia, that are from other countries, and I found the same exact issues. And every one of you can test it. Take a small wallet that you have, run it through all of them, and see for yourself that everybody comes up with a different number, and that's concerning. Uh, Additionally, these all government agencies, I mean, like I said, first world countries, especially Germany, Canada, their taxes are a lot higher than ours already. And they want to get more money. They need to get more money. I mean, every single country is in a deficit, not just us. We're all in deficits. We need to collect more taxes in order to, well, grow the IRS or Finanzamt or whatever it is in other countries. We have to grow. In order for them to grow, they have to collect more taxes, which is unfortunate. But every other country, UK, I mean, UK is nice because UK doesn't differentiate between short term and long term. uh, gains, they have a flat rate based on the individual's overall income, where in the US, we are 20% long term, and then between 28 and 37%, short term. So it's hard to estimate. Where in the UK it's a lot easier, and then we have Europe, and then um, we have Canada. So they're all going to be looking for this payday, especially with the way crypto has grown significantly.
Yeah, okay. So I'm curious, and this could probably go in a lot of different directions, but with the growth, especially, I want to say even just in the last few months, but really in the last maybe 6 months, what other trends do you foresee in crypto tax, crypto regulation? Again, both personal, individual, or in a corporate aspect.
Yeah, so I had a lot of clients sent me the article where soon to be President Trump is going to, instead of having capital gains, is he's going to want to implement tariffs, which is fine, especially on coins that are non-US based, right? He wants to implement tariffs, which is fine. Um, the issue with that is, even if he implements it tomorrow, which obviously he can't, but even if he implements it tomorrow, he can't just backdate the policy. That doesn't work. So from whatever day he implements it, it's still going to go backwards. It's still going to be capital gain. It's going to be considered an asset. It's going to be treated just like stocks, because that's really what it is. Um, in the mind of the IRS, it's like an asset. It has the same accounting methods. It's the same. It's the same thing. So even if he implements, tariffs right now, it's not going to go backdated, and the IRS is still going to be looking to go back. Now, going forward, if it is a tariff, it is good for businesses, because businesses can write off tariffs if they utilize crypto. It is not so good for individuals, because individuals cannot write off tariffs. So they're going to have fees that are not going to benefit them. It's not going to lower anything. They're still going to have income. So it's still going to be all income. It might not be capital gains. It's just going to be ordinary income, which, if you're a high income earner and your overall tax rate, you're in a state like New York or California, is 44% between state and federal, it is going to be detrimental to have it taxed as income. Now, if you are an individual with a 12% tax rate, yay, it's going to be taxed as income. You have 12%. Whereas the long term, was a flat 20, even if you were a high income earner at 44%. So it's going to benefit some, and it's going to be detrimental to others, depending on the individual situation.
Interesting. And I'm sure with that, there will also be other nuances that will come.
Yes,
And of course, in the
lots,
future,
lots.
we're talking on the annual scale. Okay, so I want to talk and dive into a little bit more because I'm genuinely curious, but I think a lot of listeners will be as well. The aspect of cold storage, DeFi, where a lot of people, and I'm sure a lot of your clients as well, have the maybe misconception that their assets are going to be shielded as long as they're not bringing it back onto a centralized exchange or whatnot, then they're paying no taxes on it and they're getting away tax free. How does that not work?
Well, well, so DeFi, we work with a few different DeFi funds, and so in the DeFi world, it is not very shielded, right? It just isn't, because they have interest and things accumulating. Um, Now the cold storage is going to be a little bit more difficult, for the IRS and government to track, right? And that's true. However, so let's say you purchase it on Coinbase. The IRS knows you purchased it, you had Coinbase. They're going to ask for your Coinbase. They know that you have these multiple Coinbase accounts, whether it's one, whether it's two, it's three. They're going to want to see that. And then when it left Coinbase, they will say, well, where did it go? And and if it went to your cold storage, yes, there's no KYC attached. They can't really prove that it's yours. Um, Now, If you're hiding it, it depends, right? If you're hiding it for certain reasons, like you owe the government tax, and that's where they're looking at you and they want to see something, it's going to be a little difficult, because they're going to look into it and they're going to have chain analysis look into it. Maybe they're going to trace your IP if you don't have a VPN. I mean, there's IPs connected to the addresses to the sends, so it's not that you can completely hide it. But if as long as it's just on your ledger or any other cold storage, and you do not do anything that causes a taxable event, you don't have to worry about it. If you're, yes, if you're swapping on it, the problem is when you're swapping or when you're selling from your ledger, you will have to utilize a third party, and that again will be a KYC. Like I said, MoonPay, any of these other pays, there is a KYC. You have to put your bank account in, or your card number, or whatever else it is, and that's going to lead back to you because these places receive John Doe letters as well. And but unless you have a taxable event, I don't think you're going to have a big issue. If you're just holding it for storage, I had some clients who bought it back in 17 and they just have it sitting there. It's just sitting there. Great, let it sit there. You don't have a taxable event, you don't have to report anything because nothing happened. Now, when it comes to you doing, having, transactions on there that cause taxable events, then that's a different story. That makes it a little difficult, but it does make it more difficult to trace for the IRS. But again, if you utilize anything to cash out, even if you don't do it through an exchange, everything cash out will have a KYC attached to it.
So really no way around it, which is good because you want to keep everything above board.
Yeah.
Okay, so I feel like there's a lot of different directions that we could take this, but is there anything that we have not touched on yet that you think is important to touch on, whether it be in terms of regulation, taxation, the platform itself?
Yeah. So I got a call from one of the university professors, and we discussed something that's actually very concerning to me and should be concerning to everybody else. And let me see if I can put this, for everybody to understand. And that was already in 2023, but the IRS has been discussing to have exchanges send out 1099s, and they're called 1099 DAs, digital assets, right? And that is honestly scaring me a lot, and for multiple reasons. So let's say you purchase Bitcoin for $2,000. It grew to be now worth $10,000 on Coinbase. And you say, hey, I want to move this to my Robinhood wallet or Kraken or Gemini because I want to trade on there, Visa better, whatever reason it is. Now you're sending the $10,000 Bitcoin that you paid $2,000 for to any of those exchanges. Okay. Coinbase does not know that this is an internal exchange. Coinbase doesn't let you say that this is an internal exchange, that is your own exchange. Like I said earlier, sending money from one checking to another or one savings to a checking doesn't create a taxable event. Now, Coinbase will send a 1099 DA to the IRS with your social security number and information saying you had an $8,000 capital gain event. You did it. Now, there's a partner, there's checks and balances. There is always, debit and a credit. Now, Robinhood, and I can say for sure Robinhood will do this because they're already doing it. But Robinhood will receive the $10,000 in your Robinhood wallet. Okay, it goes there. They will now report a $10,000 income transaction on a 1099 DA. Now you're being taxed on $18,000. Now, if anyone has ever tried calling Coinbase or getting anything done by Coinbase or Robinhood, you will see that you can contact them and say, hey, you were wrong. Do you think they will go and say, oh, yeah, no, we were wrong and we'll fix it? No, because what we're looking at billions of 1099s. As you know, we use all these different, for different various reasons. But the IRS receives this under your social security number. You don't report it. It will flag in the computer, and you will be charged tax on that $18,000, $8,000 capital gain, $10,000 of income, or if the tariffs are in place and it's treated as income, $18,000 worth of income. You will be taxed on that. None of that was taxable, but you will be taxed on it. because the IRS will say, well, you got to take it up with Coinbase to get a corrected 1099. Well, you got to take it up with Robinhood to get a corrected 1099. And that's another thing where we come in. We can handle that in an audit because we can show the proof of the transactions, and we can produce for the IRS a record of your account and hopefully find a way to combat it. I mean, I'm going to try. We're trying to sit down with them again and go over the detriments of this. We will see if it works. Maybe it won't, but that's a big concern to me.
Wow, that's so interesting. And I would assume that most people and probably everyone who is potentially doing that, bringing that into other wallets that they may have or other centralized platforms,
Mhm.
don't realize that that's happening. Otherwise, why that's not beneficial at all to you as an individual.
No, no, it's very much not beneficial. And I don't know if they will be able to backdate these 1099s or not. You know, I don't, they haven't come out with a clear guideline, but I know that they're bringing it back up to require the exchanges to do so. And that's going to be dangerous because it is not just that you pay tax on it. Your tax bracket is going to go up. You're going to lose credits, especially families maybe who rely on the earned income credit to receive this, or on the child care credit, on the dependent care credit. Like any of these credits, they will be erased if this is money that's coming in, and people's taxes are going to be very, very different.
Interesting. Okay, well, thank you for sharing that. And thank you for sharing everything that you've shared. So, where can people, and I know it's not completely live yet, the platform, but once it is, where can people find you?
Perfect. Yeah, I'm very picky because I can't sit here and say I'm developing something that is accurate and better and protects you the way you should be protected, um, and launch something that is really not up to par. So while I could have launched already, I've been holding it back because I want to make sure that I'm testing for all the bugs, the calculations, the algorithms. And like I said, doing something manual for 20,000 transactions is going to takes me about 2 weeks. So I'm having a few beta testers, but we're ready in about the next 3 to 4 weeks to launch. And our website is currently, we have a wait list, and it's defitax.us. And we're also on all the social media sites. I'm not a big social media person, so I have people doing this for me. Um, DeFi Tax is also on Facebook and Instagram and LinkedIn and X. So you can find updates there as well. Um, ultimately, I just want to do it right. And as I've mentioned before, I went to the products. I didn't ask for anything. Again, I have the emails, I have the messages, I have the blocks that I've received. I just look forward because I see my clients come to me. I mean, my clients panic when they get an IRS letter that says they have a refund. You know, they say, "Oh my God, I got an IRS letter," and I say, "It's just a refund." Or it's a recalculation. Now you get some more money back. But getting audit letters and having possibly 56 million Americans receive audit letters, and the panic that is going to ensue, and the people that will come out of the woodwork saying, "We can help you. Pay us 5, 10, $15,000 to get you through these audits for the last few years," when they really can't. They really can. And the same with us. You will not win or lose an audit if we help you. You will have an accurate audit result, and that's the goal, right? But right now, there's no such thing. And oh, one thing I want to point out, any of you people who've used any of the products on the market, let's say for 2022, you used for 22 or 21, you used any of the products on the market to report your crypto. Look at what you reported back then, and now go back and check those products out again and pull a 2022 or 2021 report. Your numbers have changed. These products changed something in their algorithms, not all of them, but the majority of them. They made changes in their algorithms without letting you know that now whatever you filed for 22 or 21 is no longer accurate, and it changed. So now imagine, and again, I have all the proof of it because I've been monitoring, watching them. And this is also again with the universities because they're not just going to publish something that is not doesn't have the backup research. Um, and I scoured my emails for these products that did make the changes behind the user's backs for an email that says, "Hey, we made changes," and they could have said, "We made changes because IRS regulations changed. We made changes because of A, B, C, D. Please review your previous year reports and maybe file amendments." Nothing. And there's on some in some instances there's now 20 to 30% variance from what was originally reported versus what it is now.
That's huge. That's wild. And I really appreciate you coming on here and sharing this because if you're not sharing something like this message, how else are people going to find out? They're
Yeah.
not.
No, and I went, like I said, I went to the governments. I have all the emails between me and the SEC, between me and the IRS, between me and the congressional committees, and nobody let anybody know. How am I? I'm a nobody in the eye. I'm a nobody. I sit at home and I work with numbers and I type into my computer. But I'm a nobody. I don't have the ability to go out there and reach the masses the way I would like to. I just told the other day. I told one of my partners. I said, if I could stand on the rooftop and scream and that would do any good, I would, but I can't. I'm limited. And like I said, I'm really not the person that is on social media and posts about it. I'm not. And that makes it hard as well. Um, I've tried to get my business partner and be like, hey, Arya, you do all the marketing, you do all the talking. And she said, no, I'm not doing it because I don't know the way you know. So here we are.
Well, I really do appreciate you coming on, and it's linked below the website for DeFi Tax if you would like to learn more. And thank you for being here, Yana.
Thank you for having me. I definitely love sharing this because I think, while we think we're safe now because nothing has happened, and we're humans, we're good at sticking our head in the sand until actually something happens. But I'm my prediction is that if not over the summer, in the next nine months or so, the audits will pick back up, especially after the publication last year, and and we will see it. We will see the damage that it could do.
So it's better to be prepared now.
Yeah, yeah, exactly, 100%.
You've just listened to the Worldwise Wealth podcast. Visit our links in the show notes below or at worldwisecapital.com to learn more about how we can assist in your borderless diversification journey. Thank you for joining us, and we'll see you in the next episode.